In this example, we are going to look at the liquidation of the partnership of Chang and Lee, and we're going to prepare a statement of liquidation. A liquidation is where the partnership ceases to exist. So we need to liquidate the company and sell all of our assets, pay off our liabilities, and give any money that's left over to the owners, the partners, and then basically close all the accounting books for the business. So I put in the beginning balances. It says that we have no cash. We have other assets worth $160,000, a liability for $10,000, and Chang has a capital balance of $90,000, and Lee has a capital balance of $60,000. So we're going to sell our assets, and we're going to sell our assets, as it says over here on the right, for $120,000. So when we sell our assets, we will receive $120,000 in cash. Now, since we're liquidating the business, regardless of the amount of cash we receive for our assets, we need to close these accounts. And the way to do so is to decrease our other assets account by $160,000. Now, during this transaction of selling our assets, nothing happened to our liabilities, nothing happened to either of the capital accounts. But we have created a loss in this situation because we sold our assets for less than the book value of all of our assets, and we sold them for $40,000 less. So we have a $40,000 recorded loss so far. After we sell our assets, we're then going to create a balance in all of our accounts. So I now have cash of $120,000, and my assets are now zero, but I still have liabilities worth $10,000, and we still have balances in our capital accounts. And my total loss to date now for balance is still $40,000. In the next step, we're going to pay our liabilities, and it says that we paid our liabilities. We owe $10,000 in liabilities, so we're going to take cash and decrease it by the $10,000 to pay off our liabilities. Once we pay off our liabilities, we no longer owe the liabilities, so we'll also decrease our liabilities for $10,000. And then nothing happens to capital, and nothing happens to Lee's capital or Chang's capital. And we don't have a gain or loss recorded when we're paying off our liabilities, so we have a zero there. But then we're ready to calculate our new balance. So our new balance, we will have zero for our liabilities. Chang still has $90,000, and Lee still has $60,000, and we still have a negative $40,000 loss. So now at this point, all we had were assets and liabilities. We sold our assets and we paid off our liabilities. So now we need to distribute our gain or loss from realization. Okay? So to distribute our gain or loss, we have a $40,000 loss at this point. And we need to figure out how Chang and Lee are going to share the loss. Well, they're going to share it, Chang 75% and Lee 25%, which was their initial partnership agreement. Share gains and losses at that rate. So nothing's going to include cash. This is not a cash transaction. We're just transferring the loss within the capital account. So we'll just go ahead and put a zero to show we're not doing anything to the capital account. And then if we take 40,000 times 75%, we're going to take 30,000 of the loss from Chang, and then if we take 25% of the 40,000, we're going to decrease Lee's capital by the $10,000 difference. So those two added together equal the total $40,000 loss. So now we can calculate our balance after realizing the loss. We still have $110,000 in cash. Chang now has a capital balance of $60,000, and Lee now has a balance of $50,000. And there's no gain or loss recorded in that transaction. So now we get to distribute our cash to the partnership. So we're going to take all of our cash, well, that didn't So we're going to take all of our $110,000 in cash and distribute it. So we'll subtract out, if I can get it to go in. Okay. And so Chang's going to get $60,000, so we'll decrease his capital account by $60,000. And Lee is going to get $50,000, so we'll decrease his cash by $50,000. So we have now distributed, those two added together, $110,000, which leaves us with zero cash for the company. Other assets are already zero, liabilities are already zero. Now by distributing the actual cash, Chang's capital account balance is zero and Lee's capital account balance is zero. And that now we have liquidated our company. So then we need to do journal entries. So this next tab down here is the preparation of journal entries from the transactions that we just did on the previous page. So we can flip back and forth and figure out what we need to do. We had $120,000 in cash that we received for the sale of our asset. So we're going to debit our cash account for the $120,000 that we received. And then remember in that transaction we had a gain or loss realization of $40,000, and that was how we were able to close out our asset accounts that were valued at $160,000. Then we had the payment of our liabilities, which were $10,000, so we need to do the journal entry for that. We paid off our liabilities, so we will debit our liability accounts and credit the cash that our cash account, since we used cash to pay it off, and our liabilities were $10,000. Then we had to distribute the loss. We had to distribute the $40,000 loss among the partners. That means we decreased each of their capital accounts. So we decreased Chain's capital by $30,000, and we decreased Lee's capital by $10,000. And that came from our gain or loss from realization account, which was a total of $40,000. Then if we look at the distribution of the cash to partners, that was the last portion here. We distributed the remaining $110,000 in cash based on their 75% and 25%. Or I'm sorry, based on what they have in their accounts. So we debit Chang capital for the $60,000 balance in his account, bringing it to zero, and we debit Lee's capital for the $50,000 in his account, bringing his capital account to zero, and then we credit or decrease our cash account for the remaining balance of $110,000. So after we've prepared the journal entries, we have closed all the accounts, including all the capital accounts for the business, so it has now been liquidated and will cease to exist.